Hi, this is Bill Wood with Disciplined Trading Decisions. This is the weekend analysis of the S&P 500 for August 22nd, 2016. But first,
Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results.
okay, what we have here is the S&P 500, a monthly chart, and you can see we're developing this wedge pattern. If you look at this move up as an Elliott wave, you might call this wave 1, wave 2, wave 3, wave 4 pullback, and we would be on wave 5. If that was true, wherever this bad boy wanted to end, let's say that it was up here somewhere where nobody thought it would end, then after that you could expect an A, B, C correction. A closer look at the monthly, you can see that we have been in balance for 2 years. We're breaking out of this balance on low volume. This was the breakout bar. That wasn't that great a volume. Right now we're one time framing higher. We have this trend line to contend with. On the weekly bar, we're in a 2-week balance. On the daily bar, you can see that we broke out of this trading range, developed balance here, broke out of that balance, and we now have a new balance up here. The only problem is that it didn't break out really far from this balance. You left excess up here, and now you have excess down here. So you wound up with a 9-day balance. On the 240-minute chart, you can see that we spiked, pulled back, spiked again, then we started to ease out into a channel, and now we're in a big old trading range. We're developing a wedge up here. We'll see which way we can break out of this wedge, to the north side or to the south side. As we take a closer look and draw in Andrew's pitchfork, you can see that that is where we got support. This line, median line here in the middle, may cause resistance as it's heading up. It would be interesting to see what happens when we get up in this area. I had a target from previously around 2200 that I would imagine is a psychological level. We're very close to that right now, so wouldn't be surprised if we reached up there. On the 30-minute chart, case for the downside, we'll put a Andrew's pitchfork here. As you can see, that is too steep. It doesn't match that. So what you may want to do is change that to a shift and see if that fits better. Okay, right now that's fitting better. If it breaks out of this to the upside, which it looks like it will do, then we may find resistance up here, maybe at our target 2200, maybe this trend line here. But as of right now, it looks strong. Looks like it should break out of here. But if not, if it's not able to, it could come back down to here or follow this flow down. Something interesting to note at this all-time high. We'll take a look at this at the on the market profile. The all-time high was not what we would call a good high. You had all three of these bars ending at the same price. What we look for at highs and lows is rejection. So even though on the daily it looks like there's excess up here, when you look at it close in the market profile, you see that there wasn't excess really at all. You have a prominent point of control up here. Everybody who, these yellow bars, everybody who's sold short down here is kind of selling at short at bad prices. There's not a good high here. There's a very poor high here. There's a poor high here. There's not a good high here. You take all these things and you carry them forward, and which leads me to believe that price will revisit this high. And like I said, would not be surprised if we got up to here to 2200. Now, as you can see, we have balance in this area. It's very comfortable around this 2180 area. So whichever way it breaks out from here, you're going to have stops letting out. And you could get a day like this that's kind of stretched out. Same thing goes for if you get above this area, this 85 area, you may have stops letting out. And what appears to happen is that you had balance here, broke out of this balance, pounded against this 2190, 91, couldn't get any higher, so the stops let out and you're down off to the races on the downside. And since that was just an inventory adjustment, there was no follow through. So now we're testing this area again. You can see the latter half of the day is ending toward the top of the day. So it looks like it's pushing higher. The longer it takes, the longer we wait in this area. If it can't make it higher, you're going to have another long liquidation. So if I was long, I would get very concerned if the market broke below this area, 2175. In fact, that's what this may have been. It opened up here, raced lower, got some people to stop out, I'm sure, and turn around and ended the day higher. All this points leads me to believe that we're heading higher, that we're going to break this high. Whether it's next week or not, we'll see how it opens on Monday, and we'll take it from there. This is Bill Wood, and if you're watching this anywhere other than my blog at Disciplined Trading Decisions, go there and check out our other resources and sign up for our weekly newsletter and weekend analysis. Stay motivated, stay focused, and stay disciplined, my friend.